Let's continue with some questions on non-resident taxation. JJ Limited, a company incorporated in Australia, has entered into an agreement with KK Limited, an Indian company, for rendering a technical service to the latter for setting up a fertilizer plant in Odisha. Now, when you are setting up a plant in Odisha, that means you are setting up a plant in India and you are providing technical services to India. A non-resident company is providing services to a resident for business plan to be set up in India. Now you can understand the services, the fees for technical services were utilized in India, and definitely it is one of the situation of section 9(1). As per the agreement, JJ Limited rendered the both offshore and onshore service. Offshore means in India, onshore means in India, offshore means outside India. That doesn't make any sense whether you are providing services in India or outside India, whether the agreement was executed in India or outside India, whether currency was paid in Indian rupee or foreign currency, whether amount was received in India or outside India. It doesn't make any sense. When the money is utilized or the services are utilized in India, it is deemed to be accrued in India. So 1 crore and 1.5 crore was paid for offshore and onshore activities. JJ Limited is of view that it is not liable to tax in India in respect of rupees 1 crore as it is rendering for services outside India. Discuss the correctness of the view for JJ Limited. What they are saying, whatever services we have provided offshore, that means outside India, are not liable to pay tax in India because they are non-resident firm and this is a foreign income. If that is the case, then every foreigner will do the agreement and he will show the whole engineering and design was made outside India, service was provided outside India, and obviously government of India, Indian income tax will lose a huge amount of money. That should not happen. Therefore, we are having section 9(1) with us. The explanation below section 9(2) clarifies that income by way of inter alia fees for technical services from the services utilized, this is very important, in India, from the services utilized in India would be deemed to or accrue arise in India in 917. How do we remember 917? So I, R, F. I is interest, which is given in subclause 5, royalty is given in subclause 6, and fees is given in subclause 7. So 917. In case of a non-resident to be included in his total income, whether or not such services were rendered in India, whether you have rendered in India or outside India, still it is deemed to be accrued in India. And even if you are a non-resident, Indian income is taxable, which includes income deemed to accrue in India. In this case, the technical services rendered by the foreign company, JJ Limited, was setting up for fertilizer of plant in Odisha. Therefore, the services were utilized in India. Consequently, as per the explanation below section 9(2), a fee for 2.5 crore for technical service rendered by JJ Limited, both offshore and onshore, to the KK Limited is deemed to accrue in India and includable in the total income of JJ, and JJ Limited is liable to pay tax and KK Limited is liable to deduct the TDS. Therefore, the JJ Limited, therefore the view of JJ Limited that it is not liable to tax in India in respect of fee of 1 crore because services are rendered outside India is not correct as per income tax law. Next question. Examine with the reason whether the following transactions attract income tax in India in the hands of recipient under section 9 of Income Tax Act. So here very specifically you have to discuss provisions of section 9. Don't think anything else, only deemed to be accrued in India or not to be accrued in India. A non-resident German company which did not have any permanent establishment in India, so they don't have any PE in India, no PE in India, entered into an agreement for execution of electrical work in India. So they are going to do some technical work, electrical work. Separate payments were made towards a drawing and designing which were described as the engineering fee. That is also technical fee. The assessee contended that since the business profit should be taxable in Germany, as there is no business connection within the meaning of section 911 of Income Tax Act 1961. So what they are trying to say, because we don't have permanent establishment in India, we don't have business connection in India, and because we don't have business connection in India, this particular income should not be taxable according to 911. Now whether, please understand, when you are providing a technical services which are utilized in India, that is more important. Whether you have your fixed place of business premises here or not, that is not a concern here. Whether the services were provided in India or outside India, that is also not concern here. When services are utilized for the project in India, so here the whole services are utilized for the execution of electrical work in India, therefore it is deemed to be accrued in India. A firm of solicitors of Mumbai engage a barrister in UK for arguing a case before a Supreme Court in India. So Indian law firm have invited a barrister, or you can say advocate from the UK, and the payment of £5,000 was made as per the terms of professional engagement. So this is a professional service. Whether section 911 is applicable for professional service, because section 911 use the language business connection. The business connection, if you literally interpret, then it only covers business. It doesn't include the word profession. But the definition of a business is such a wide definition, my dear friend. It includes not only profession but also vocation, and therefore business is included business includes even profession, and therefore section 911 is even applicable for professional services and not only for trading activities or business activities. Amount paid by the government of India for use of patent developed by Mr. A, who is a non-resident. Definitely, whenever government of India makes payment, it says it is taxable in India, because GOI, government of India, is using your patent and making payment of royalty. Last one, Sai Engineering, a non-resident foreign company, entered into a collaboration agreement as on 25th June 2020 with Indian company and was in a receipt of interest of 8% debentures of 20 lakhs. So they did not pay the money. The consideration is paid in form of issue of debentures. So whether this 20 lakh rupees will be taxable, which is a non-monetary income, definitely yes. Not only that, because it is the 8% debentures, now onwards, this non-resident is holding a 8% debenture of an Indian company. Not only technical service but also interest, both will become taxable in India. Issued by the Indian company in a consideration for providing the technical know-how utilized in a business in Mumbai during the previous year. Okay. First point, fees for technical service is taxable under section 917. In this case, a separate payment made towards drawing and designing are included in the nature of fees for technical services and therefore taxable in India by virtue of 917, since the services are utilized for electrical work in India. As per explanation below 9.2, where income is deemed to be accrue or arise in India, under section 917, such income shall be included in the total income of a non-resident German company, regardless whether it has a resident or place of business or business connection in India or not. Okay. As per 911, all income accruing, this is for advocate. You remember, foreign advocate from this barrister from London has come to India to represent case. Section 911, all income accruing or arising whether directly or indirectly through or from any business connection in India is deemed to be accrued or arise in India. So here word is business. They have not written the word profession. So depending upon the case law, they have given the judgment that this business word is so wide that it can also cover profession into it. In this case, there was a professional connection between firm of solicitors of Mumbai and barristers in UK. The expression business includes not only the trade and manufacture, it also includes within the scope profession as well. Therefore, the existence of the profession connection to the existence of the business connection amounts to existence of business connection under section 911, and therefore it is taxable in India, and it was held in the case of Barendra Prasad Roy ITO. So the old case law, it is decided by the court, decided by the Supreme Court, therefore it is a law of land now that this business word includes profession. Hence, amount of £5,000 paid to the barrister in UK as per the terms of the professional engagement constitute a business which is deemed to be accrued or arise in India, and it will be taxable in India. Next one. As per section 916, income by way of royalty payable by the government of India is deemed to accrue or arise in India. So royalty means consideration for use of patent, that is okay. Therefore, any amount paid by the government of India for use of patent developed by Mr. A, who is a non-resident, is deemed to accrue or arise in India, and he is liable to pay tax in India. That was very simple. Rupees 20 lakh being a debenture issued by Indian company in consideration of providing of technical know-how for use of its business in India. Use in its business in India is the nature of the fees for technical service deemed to accrue or arise in India to Sai Engineering, a non-resident foreign company, under section 917 and hence it is taxable. Not only debentures, sir, now debenture interest will also become taxable. Further, as per section 915, income by way of interest payable by a person who is a resident in India is deemed to accrue in or arise in India. Therefore, interest income from debentures of an Indian company is deemed to accrue or arise in India in the hands of Sai Engineering by virtue of section 915. Even interest is also taxable. Sir, because the section was question was very much specific to follow the provision of section 9, and we have not covered a DTAA provisions, but definitely when India is also taking tax by linking the source of income here, and foreigners, a non-resident, is liable to pay tax in his own country, so there will be an incidence of double taxation. Okay, a non-resident in his own country will be a resident and global income is taxable, and in India is taking tax because income is accrued or deemed to be accrued in India on source rule. If there is a double taxation, a DTAA agreement will take care of that particular situation. We have not referred anything about DTAA because the question was very much clear that you have to speak whether the income is taxable or not taxable according to section 9. So according to section 9, everything whatever we have discussed was taxable. Atlant, Italy, a company incorporated in France, was engaged in a manufacture, trade and supply of equipment and services for GSM, cellular, radio, telephone system. So it's very technical phrases, and this is not actually case question, it's a case law. Okay, we are discussing a case law. It supplied the hardware and software to various entities in India. See, if it was only hardware, it is the sale, then it would have become import, and import is not taxable in the hands of non-resident, isn't it? If you are importing the goods, if I import mobile from USA, it's not taxable in India, okay, because that's not an income earned by a non-resident. Supply of goods is not taxable. Please understand, that's import export, that is not taxable. Yeah, supply of services, supply of technical know-how, supply of patent, all those things are taxable in India, but not supply of goods. Here what has happened, they have also given hardware as well as software. Only software fully taxable, only hardware not taxable. They have given both. Now whether it is taxable or not, that we have to discuss based on the case law. To various entities in India, software licensed by the assessee embodied the process which is required to control and manage the specific set of activities involved in the business of use of its customer, and also made available to its customer who use it to carry out business activities. What they are saying, the hardware will not perform without the software. Software is embodied in the hardware. The AO contended that the consideration for supply of software embedded in hardware is a royalty, and if it is a royalty, the section 916 will be applicable. Examine the correctness of the action of the AO, assuming that the software that was loaded on the hardware and embedded in the system does not have an independent existence. So that software does not have any independent existence. Because it is loaded on the hardware, it is having some kind of existence. Otherwise, independently, you cannot sell the software separately. It's like in your pen drive, no? Or when you attach the pen drive to your laptop or computer, automatically a software runs. Without software, the pen drive will not work, or any device, any computer device will not work without a software. Okay. The issue under consideration is this: whether the consideration for supply of software embedded in a hardware would a tantamount means whether it is equal to a royalty for attracting the section 916 that is deemed to be accrued in India. As per section 916, income by way of royalty payable by a person who is a resident in India would be deemed to be accrued in India. However, where it is payable for transfer of any right or the use of the property or information or utilization of service for the purpose of any business or profession carried on by such person outside India, or for the purpose of making earning of any source of income outside India, the amount payable by way of royalty would not be deemed to be accrued in India. So if you are doing the activities outside India, the patent was used outside India, then it is not. That is an exception to this particular law. Okay. Only if it is used in India, taxable in India. Used outside India, not taxable in India. For this purpose, royalty includes a transfer of all or any right to use a computer software irrespective of the medium through which the right is transferred. The fact in the case are similar to facts of Alcatel Lucent Canada 2015. This particular case law is there, wherein the above issue came before Delhi High Court. The High Court observed that the software supply is an integral part of GSM mobile telephone system and is used by the cellular operators for providing cellular services to its customers. So without software you cannot run the hardware. Where payment is made for hardware in which the software is embedded, the software does not have any independent functional existence. No amount could be attributable as a royalty for software in terms of section 916. In this case, in the software was loaded on the hardware and embedded in the system and does not have any independent existence. When I purchase pen drive is important for me, not that software. I know without that software the pen drive will not work, but for me hardware is more important and software is insignificant. It is important but it's not significant, and there could not be any independent use of such software. Therefore, the rationale for Delhi High Court ruling can be applied to the case in hand. Accordingly, the action of the AO treating the consideration for supply of the software embedded in the hardware as a royalty is not correct. So it's not, hardware was important. You can always say when a hardware is more important than software, it's not a royalty. If software was more important than hardware, then obviously it is a royalty, and then we will take the charge of section 916, and the same income will become taxable in India. Thank you.